Hey traders, welcome back to this week's weekly Forex forecast. Last week I didn't do a video, apologies for that. I did actually get caught traveling. On Friday I was supposed to come back. I had flights booked for Friday last week and I was going to do the weekly Forex forecast on the Saturday as always. But unfortunately, a family member had a medical emergency, meant they couldn't fly. Our flights ended up being cancelled or we just didn't use them. And I had to get trains back with them through Europe. Between Europe and the UK. So all weekend, last weekend, I was stuck on a train and I really couldn't put the video out. So apologies for that. The family member is well, so everything is okay. But coming into this week, euro dollar, we had that big news yesterday of Jerome Powell pivoting. So what we basically saw yesterday at the Jackson Hole meeting was Jerome Powell came out and signaled that we were looking at September rate cut, and the market has now fully priced in a September rate cut. And what this means is, of course, a couple of things. First and foremost, we saw the dollar sell off. So we saw this rally in euro dollar last week. And it also means we could be about to go into risk off mode in equities, because what tends to happen when you get rate cuts, you start to see the dollar selling off. Then equities also sell off because rate cuts are actually negative for the economy, in the near term. The Federal Reserve are cutting rates now because growth is slowing, the jobs market is weakening. So if that continues, of course, you can see, or it tends to be a signal that a recession is at least on the cards, but not necessarily guaranteed. So if that's the case, we're going to see a weakening of the dollar, and then we're going to see equity selling off. What then tends to happen is you tend to see a reversal in the dollar, but I wouldn't be looking at that just yet, maybe in a month's time perhaps. But certainly, you'd see equity selling off, reversal in the dollar, and then risk off flows coming into Forex. So I do like risk off setups going into next week, but the exception is the US dollar. I am looking towards the short side in the US dollar coming into this week. So in terms of euro dollar, you can see we kind of pulled back. We've had this inverse head and shoulders. And the question was, are we going to bounce at this shoulder or are we going to start the next leg down? And that was likely going to be dictated by Jerome Powell. Jerome Powell came out, signaled the rate cut. We've seen the dollar sell off, and I would be very surprised if this reversed, next week. Quantitatively, the dollar is still weak. It was a short last week as well, even though, of course, we didn't do the video. But with members, we were looking to the short side, generally speaking. And if it's quantitatively still weak in Hedge Dash, which it is, as we'll see when we go through the portfolio selection process in a minute, then I want to be looking on the short side unless or until that changes. And then when we start to see the US dollar quantitatively strengthening or bottoming in the scores, then I will be looking at that and saying, okay, we could now be looking at risk off coming into equities as the dollar reverses. So what looks likely going into next week, we actually broke the inverse head and shoulders neckline. And whether this continues straight through or pulls back remains to be seen. But it looks to me like we're probably going to make our way towards the prior high, which also happens to sit right at the sell zone, which is the profit taking zone for me next week, because I can only buy this market or do nothing. But it sits right at the sell zone or the profit taking zone. So any long positions in euro dollar next week, this prior high into the sell zone is probably going to be a very good profit taking target. So a couple of things I'll be looking for next week. What I want to see primarily is, ideally, when I'm looking at these kind of setups, I want to see this come back into the buy zone. Now, because we had that big move up on the news, for it to reverse all the way back down, take out the news low and then bounce again, it could do that. It would be a major whipsaw, but perhaps, the intra-week breakout stuff is the one to look for in euro dollar for next week. So what I'd like to see is I'd like to see it come down. If it does this reactively, I'm going to be looking at buying the dip below the 1.15959. This low right here would be perfect if we did come back, retrace the news event and took out this low. And of course, being reactive, so reactively, if it does this, then I'm going to do this. And that is why I'm going to be looking for a 1 or 2 day reversal to the upside. We may go straight through and take out the left shoulder. That would be that textbook right shoulder. But again, this is all stuff which I'm going to be reactively looking for in real time. Do we come down to this low? If we do we trade straight through it, or do we start to lack momentum? If we go straight through it, then I'll be looking at this low, etc., etc. So that's what I'm going to be looking for next week, for a 1 or 2 day reversal to the upside. Because we got the news, what I think is more likely to happen. So looking to have kind of all bases covered, so I can kind of trade this, regardless of whatever happens. But this will be the primary setup I'll be looking for in the real-time setups with GMT members. But if you're trading intra-week or you trade Fibonacci's, We've already got that reversal back above the moving average. We kind of talk about this, quite often. We break above the moving average, then there's a consolidation, and then we start to trend in that direction. Sometimes we come back and bounce off it. So because we had that news event, what would not surprise me next week at all is to see this pull back, test the moving average, or just consolidate above it, and then you get your bull flag set up. So it's essentially like a follow through trade. We talk about this in the news events. You get the news, consolidates, and then you get a follow through. So you get the news, consolidation. So again, you might be saying, well, how do you know if it's going to pull back and take out the low, or if it's going to break out to the upside? Well, I'll be looking to see, is this a corrective wave? If it pushes up like this and the next leg down is sharp, then I'd be looking at this take out the low. If what follows on Monday is we push back like this, and then we push higher, and then we push back, and then we push higher, we push back, and we just hold, right? If that happens into Monday or Tuesday, then you can look for the bull flag, right? Because you're looking at the form, and the form is corrected. If we get a sell-off on Monday, and then it kind of moves sideways, and then another sell-off, then you're back down to the lows, right? So what does it do on Monday? Do we get the consolidation, which is a sign that the market's getting ready for the next leg up? Or do we get this kind of V-top, consolidation, etc.? If we get this V-top and a pause and another sell-off, I'll be looking at this. If we get the consolidation, then I would be expecting that follow-through trade to the upside. So that's what I'm looking for in euro dollar. The place at which we become extremely oversold is the 1.1476. Don't expect it to get down here, but worth having on your chart anyway. I can, if we get down here, pull the trigger on a long opportunity as well. So that's what I see in euro dollar. I will be looking for both of these, but I anticipate this kind of consolidation and follow through into the highs. I think that's the most likely move coming in euro dollar next week. Okay, so moving on to the portfolio selection, we can see sitting at the top is the pound. So the pound and the Swiss franc are my number 1 and 2 long themes. The euro, which has been the number 1 long theme, is still relatively something I want to look at to the long side. So going into next week, the pound, the franc, and the euro are 1, 2, 3 on my list. This is actually showing those EU majors kind of outperforming as the dollar sells off. However, when we look to the short side, we have the choice basically between the commodity currencies alongside the dollar, because we've just discussed, if we're getting a rate cut, we've had that repositioning, that repricing of a rate cut in September. So we're most likely going to see the dollar continue lower. It was already kind of quantitatively weak overall, despite the fact we had a little bit of a push higher. And so outside of that, we're left with the commodity currencies and the yen. Well, if the dollar's weakening, by definition, it's going to be supportive of all of these currencies here. But the Japanese yen does tend to, benefit on that kind of US dollar yen positioning. So because it's also a risk off currency, if we do start to see stocks selling off because of the rate cut, it very well could outperform the New Zealand, the CAD, and the Aussie. So for that reason, I'm going to stick with the weakest ones down here, which is the New Zealand and also the Aussie. You could also look at the CAD to the short side, versus the pound. So pound CAD to the upside, CAD franc to the downside, euro CAD to the upside. I would also anticipate performing well over the next few weeks. But overall, I'm going to be looking at pound dollar to the upside. These are the markets at the top of my watch list going into next week. US dollar franc to the downside, euro dollar to the upside, which we've already looked at. And we're also going to be looking in today's video at the top of my watch list next week for pound New Zealand to the upside, New Zealand franc to the downside, euro New Zealand to the upside, which are all risk off setups as well. And then finally, pound Aussie to the upside, Aussie franc to the downside, euro Aussie to the upside, which are also all risk off setups, which is a theme we're really seeing playing out in Forex. Aside from the US dollar going down, again, because that's a risk off currency, but usually you get rate cuts, the dollar sells off, and then the dollar starts to reverse, and then you get real risk off as equities sell off. So that's what we're going to be looking at in today's video, and they are the pairs at the top of my watch list for next week. Okay, so kicking off the watch list with crude oil, as always, going into next week, I do think there are better setups, but we cover crude oil every single week, and on balance, I am looking for potentially short opportunities in crude oil. So crude oil, we are seeing it suffer after the end of the Israel-Iran conflict. And if we're getting the US slowing down and we're getting growth slowing down globally, which is what will happen if the US slows down, then, you know, this is all going to weigh on the price of crude oil. So I would like to see shorts in crude oil as an opportunity. What I would like to see preferably in terms of opportunities is a breach of the 67.41. This is where we turn overbought during the week above this level. And this is the high. The prior daily high is right up here. So it's nearly at the second upper bound. So this 4-hour high right here is the high that I'll be looking for price to attempt to break through in the sell zone. So now what we've got here is we have a market which is attempting a bullish breakout at overbought levels, right? That's where you tend to see these markets failing very often. So I'm going to be looking for a failure and a 1 or 2 day liquidation back inside the range. This is the exact setup we look at day in, day out with GMT members in real time. And that's what I'm going to be looking for next week in crude oil. If we get crude oil breaking out midweek, you can look for that kind of breakdown. Just as we looked at in euro dollar, you get the break below the moving average in this case. In euro dollar, it's pushed above the moving average. And we're looking at it kind of curling round. But if we get that breakdown below the moving average, that would set up the bear flag setup. Again, for those of you who like Fibonacci, that's what I'd be looking for. The moving average essentially just acts as a dynamic trend line, right? You break above it. This is basically the trend line here, which is broken. So those are the two things I'd be looking for. If we end up above the 71.06, which I don't anticipate happening, but it's always worth having these gold levels on your chart. This is where we become extremely overbought during the week. This would actually signal a potential trend change because it's such a big move relative to its expected volatility. And it would be the second place I could pull the trigger on a short if I so wish. But I don't expect it to get there, but it's worth having the 71.06 on your chart is where this market would be next week, extremely overbought. Okay, so kicking off the Forex universe with the pound pair. So pound long is my number one theme going into next week. And pound dollar, we have basically the same setup as we saw in euro dollar. We had the news event. And so I'm going to be looking for one of two things. Now, if we come down, take out the low, and again, how are we going to know in advance? Well, you know, it's difficult to know too far in advance. What we really need to see is how the market reacts, you know, on Monday and Tuesday. Does it consolidate? Is it sideways in form and choppy? In other words, that's indicative of another move higher. Or do we get that V top and then a kind of consolidation, which is indicative that it could come back down to the lows? Either way, first and foremost, if we come back and retest the low, I would be looking at this as an opportunity to buy the dip below the low. So below the news event low. And this is where we enter the buy zone below the 1.33913. And I will be looking for a 1 or 2 day reversal back inside the range. We've had this channel breakout as well. So we may be coming back to the top. Again, we have this kind of inverse head and shoulders. So we could very easily see a push higher, you know, maybe 1, 2, final 5, and then maybe we get the top and we get the dollar strengthening, you know, in a month's time. So I am looking for this to go higher. The second thing you can look for is this then. Because we had that news event, you know, on balance, what do I think is most likely to happen out of the two of these? Well, obviously I don't know 100%, but I would anticipate maybe this sideways move. So you get the pullback, maybe even, you know, test a 50% Fibonacci, and then you get the follow through bull flag into the 1.36509. This is a great profit taking target for any longs next week in pound dollar. If we end up below the 1.32614, extremely unlikely in my opinion, but this is where we would turn extremely oversold during the week. I can also pull the trigger on a long position below there if we were to get there. But again, most of the time, 9 times out of 10, we're not going to get to these gold levels unless you have some kind of news catalyst. Then you know you can see these gold levels being tested. Next is pound New Zealand. This is either a long for me or do nothing. I cannot sell this market next week. You can see we already have this big move with momentum, so this is another market that could very easily go intra-week. You know, you take the prior low, pulls back, maybe hits the 50% and the moving average, and that gives you your kind of follow through to the upside. What I'm going to be looking for primarily is for this to start to come down. If this fails and comes all the way down, and again, sometimes we see this, you see these big moves up, and sometimes when they're this steep as well, it can be a bit of a blow off top. You come all the way back down, and in those scenarios, often you do actually retest the beginning of that move, and then it starts again. So I wouldn't be completely shocked if it did come all the way down and test the 2.27624. If it does this in the buy zone, this is where I'm going to be looking between 2.2856 and this low over here for double bottoms on lower time frames, reversal patterns, looking for that 1 or 2 day reversal back inside the range. If we come down and we test this and we just move sideways and we hold the moving average, That's where you can look for that, intraweek breakout. Does something like this, pulls back, and then you can look for the bull flag into the 2.32399. So great profit taking target next week in pound New Zealand. I can only buy this market or do nothing. If we come back down below the 2.26652, I don't anticipate this happening. This would have to have some major news catalyst, because don't forget, we already had this rally on the bearish RBNZ interest rate decision. So this is most likely going to follow through. And so out of the two of these setups, again, an intra-week breakout, I would imagine, is probably most likely on the cards. But either way, I'm going to be looking to be reactive, not predictive, as always. And finally, we have pound Aussie in the pound pairs. Now, I can either buy this or do nothing. Selling this market's not an option for me. We've already broken back down below the moving average, so we've kind of lost some momentum here. So if we do continue lower, what I'd like to see is I'd like to see it breach the 2.06632. It would then turn oversold during the week in a market I'm looking to be long. They'd be looking just basically to buy the dip. And there's a really nice low here. In fact, there isn't a low here, but there is a stair step high over here as well. Now, I would preferably look at the low, which previously pushed price higher, rather than the high that pushed price lower, because I'm looking to buy. But both of these, as a combination, this is a good area to look for. But I'll be specifically looking for this low here. So if we break through here, test this low, this is where I'm going to begin to look for a failed breakout to the downside. For sellers to book profits or pull their positions, get trapped, and I'm going to be looking for that 1 or 2 day liquidation, which we see over and over and over and over again, which we trade in real time with members. But that setup, it appears every single week, pretty much every single week, and usually multiple times per week, in different assets. That's what I'm going to be primarily looking for. The extremely oversold level is down at 2.04848. Don't expect it to get there. If it does, I can pull the trigger on a second position or an initial position if I'm not already long. And the third and final thing you can look for is we're below the moving average. So if we start to make our way down and then you get the re-break and the moving average follows it, that's when you get your intra-week breakout and bull flag. And of course, you'll probably at that point, you'll probably do something like this, right? And you'll be able to put that kind of trend line on and you get that breakout. And then the bull flag into the profit taking zone at 2.102. What I like about this, right at significant prior highs. So this is going to be a great profit taking zone or target for any intra-week longs next week in pound Aussie. Okay, so moving on to the Swiss franc pair, starting with US dollar Swiss franc. Now we basically have again the same setup. We've got that new sell-off, but in euro dollar, pound dollar, it's that rally. And so I'm going to be looking for either a pullback and a test of the highs. And the way you would look at this is probably, it starts to pull back. If we consolidate like this, that would give you the opportunity to look for the kind of bear flag follow through trade to the downside. And again, if we have that V bottom and then kind of consolidate, then I would be anticipating maybe a pullback here. But if we get this kind of consolidation, you can look for that bear flag follow through down to the 0.79245. This is where we enter the buy zone. In other words, the odds of this market running out of steam and starting to pause or reverse are greatly increased below the 0.79245 once we enter this buy zone. There's also a support level over here. So we enter the buy zone and we test this low and you're short from in this area somewhere. That's a great place to book your profits, because you could see other people booking profits, you could see sellers get trapped, you can see this snapback. So on balance, this is what I kind of anticipate happening, with the moving average coming down. If reactively we end up V-bottoming, we snap back, and then we kind of do this and then take out the high, then above this high is where I'd be looking for that reversal trade. So looking for a failed breakout above the high and looking for that 1 or 2 day liquidation to the downside. Those are the two setups, and preferably this one. This is the one I prefer, but those are the two setups you can look for next week, and that I would be anticipating happening. The third and final thing, of course, is if we take out the 0.81749, it is the second place I can pull the trigger on a short, but I don't expect to get at this extremely overbought level because we had a significantly bearish catalyst last week, and significantly bearish catalysts, which sell off like this and hold, tend to, kind of just move sideways in a shallow way and follow through to the downside. So that's what I see next week. Just like the pound and the euro dollar pairs, I do anticipate this being the most likely setup to materialize next week in US dollar franc, as opposed to the test of the upper bound. Next is New Zealand franc. I can either be short or do nothing. Buying this market is not an option for me next week. You can see we broke out of this counter trend line channel, and this would actually be quite a good place to look for a potential short next week. So what I'd be looking for is, I'll be looking for price to pull back, breach the 0.47503, so we enter the sell zone, and we could very easily see this retest the underside of this ascending channel. In that scenario, I would be looking for bearish reversal patterns, double top, etc., looking for that 1 or 2 day liquidation. If we pull back and we fail to take out the upper bound, and instead it re-breaks back down below the moving average and it follows it, then essentially what you have is you have another counter trend breakout, right? By getting that kind of pullback and re-break, you will see, I can't draw the trend line on for you now because the candles haven't printed. But if we look at the moving average now, I can almost use that into the future as a dynamic trend line. That's why we're looking at the moving average and not the counter trend, because we don't have that information. But what you'll probably see is it will do this, you know, and then when it breaks, you could draw that channel on next week and it will be that pullback and then sell off down here. So those are the 2 things I'll be looking for. Preferably, I want to see this next week. This is the primary setup I'm going to be looking for. The level at which we turn extremely overbought is the 0.48008. Worth having on your chart. Don't expect it to get there, but if it does, I can pull the trigger on a short as well from above that level. And the final franc pair before we move on to the rest of the euro pairs is Aussie franc. Now, Aussie franc is setting up a nice bear flag. I would ideally like to see this pull back and breach the 0.52487. If we breach that and we take out this high right here, the 0.52620, this is where I'm going to be looking for that failed breakout to the upside, for buyers to get trapped, pull their positions, and I'm going to be looking for that short liquidation for 1 or 2 days. If we break through and we start to make our way back, but we get a fast market, in other words, it's so weak that it can't turn overbought during the week to set up a potential short opportunity there, it instead re-breaks back down below the moving average follows it, pulls back. You can look for that bear flag sell-off into the profit-taking target to the downside next week at the 0.51387. So that's what I anticipate next week in Aussie franc. I would preferably like to get this. The extremely overbought level next week sits at 0.53037. Okay, so wrapping up the Forex universe with the rest of the euro pairs before we move on to gold and silver, starting with Euro New Zealand. So we had this big directional move last week because in the New Zealand pairs, you know, we had that sell-off because of the RBNZ and the weak response we got from the New Zealand dollar off of the dovish interest rate decision. So I am looking for this to follow through. We kind of had the news, profit taking came in, and similar to what we looked at with the US dollar pairs and the news yesterday, probably going to get the consolidation. So it's interesting because we had the RBNZ before Jackson Hole, right? So we have the weakness in the New Zealand. Look at how it consolidates. And that's the kind of Monday, Tuesday consolidation I'm talking about in the US dollar pairs. So I do think this is going to go higher. I can only be a buyer of this or do nothing because I look at the same setups every single week. Reactively, if this comes down and breaches to 1.97874, I would be looking for the stair step into the prior high. This is where I'd be looking for that 1 or 2 day reversal to the upside. Now, because we had a news event and a consolidation, what's more likely going to happen is we consolidate, maybe we come back and test this, or we trade just below it, and then you get your kind of intra-week counter trend line move like this, right? Then you re-break, the moving average will follow, and that sets up your bull flag into the upper bound and the profit taking target next week at the 2.01396. So those are the 2 setups I'll be looking for. Because we had the news event, I would most likely think we're going to get that kind of intra-week move up. But either way, I can only be a buyer of this market or do nothing. If we end up down below the 1.96114, it means we've had some kind of unexpected catalyst. And it's very unlikely because we've already had that big rally off of the New Zealand news anyway. But if we did end up there, just as a matter of routine, I could pull the trigger on a long position and actually it would be back into the major channel bottom. But I don't expect this to happen, but worth having the 1.96114 on your chart nonetheless, just in case something unexpected happens or we get some kind of unexpected announcement next week. Unlikely, but it's always good to be prepared. And the final Forex pair is EurUsd before we move on to gold and silver. Now, we also have this market trending higher. I can only be a buyer of this market next week. I cannot sell it under any circumstances. What I want to see is I would ideally like to see this break down below the moving average, enter the buy zone, and take out this low over here. This is the low that if we come down and test this, I'm going to be looking for a failed breakout and for buyers to pull their positions for this liquidation to the upside. If we start to break down and then instead of taking out the lower bound, and again, you'll probably push high like this, break down, push high like this, maybe you're down like this, and then you get that re-break, probably be a counter trend line breakout and a break back above the moving average. That sets up your intra-week bull flag into the profit taking zone at the 1.82095. We do have Aussie CPI next week, so the Aussie pairs could be pushed, out of all of the pairs, more likely to be pushed towards their second upper and lower bounds, but I still think it's relatively unlikely. But if we did get EurAusd come down, say on Aussie CPI next week to the 1.77257, I can also pull the trigger on a long position below this level. But again, don't anticipate this happening next week. Okay, so wrapping up the video, as we always do with gold and silver, and of course, because we had that dovish pivot from Powell, which is now yesterday, I am anticipating further dollar weakness going forwards, at least in the near term. So I do have a bullish bias on both gold and silver. I want to be only a buyer of gold or only a buyer of silver next week. I cannot short either of the metals next week. So what I'd like to see is, ideally, I would like to see this pull all the way back down next week and test not just the 3296.22 where we turn oversold during the week, but also this low down here. This is where next week I would be looking for sellers to get trapped and for a liquidation to the upside. Just like with the other dollar pairs, because we've only just had this and it was based off of a news event, there is every reason to suspect this kind of break for the first time above the, look at this. The moving average is tracking this, but it's actually tracking, a downward channel. Now we get this break up, you can look for this to consolidate. So look on Monday and Tuesday. Is it doing this? If it is, that's a sign. Never short a dull market. That's what they say. And that's because if this is corrective in nature, the odds are you can see the follow through pretty much, from Tuesday onwards. So that would be something to look for next week, that kind of bull flag opportunity. We've already had the break consolidation. It's that first kind of break of the moving average and then move away. The 342509 is the profit taking zone because that's where we entered the sell zone, but I would anticipate it taking out this high. So that's a good high in the sell zone to actually look for potential profit target next week if you're long gold. And last but not least, we have silver. I can only buy this market next week. I cannot sell it. Ideally, I would like to see this enter the buy zone. If this turns oversold during the week and takes out this low, this is where, as always, I'll be looking for that 1 or 2 day liquidation back inside the range. However, when I say the range, I mean this range. However, because we've just had that news event, if I have to choose and I had to guess, if I have to be predictive, I would say on balance, because nobody can tell the future, but on balance of probabilities, I would suggest that we're probably going to consolidate. Because also, look at this inverse head and shoulders. This is the kind of right shoulder, and then we break through it with momentum. So now we have this kind of reversal pattern here. So any kind of pullback next week into this area, I would be looking for this to accelerate. To the upside, the profit taking target is the 40.74. If we end up below 35.13, we are extremely oversold during the week. I would be amazed if that happened. You'd have to see something significantly risk off out of the blue, which nobody's expecting. So worth having on your chart as always, but I don't anticipate it's coming down to here. So that is probably, in my opinion, what we're most likely to see. If it fails, and this doesn't open the week corrective, but it just V-tops and then sells off sharply, then I would be looking for this. But I anticipate it's probably going to do this kind of follow through from the news event yesterday. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.